guys, what's going on? Today I have prepared for you another trade with a simple setup using buy side, sell side liquidity, inverse fair value gap, and also with footprints. First example will be based on the price action, and the second example, the second entry model, will be a footprint chart. So I have here 4 things I want to see on the chart, so let's get into it. Firstly, I trade during the London session, so in my time zone it's 8 a.m. to 11 a.m. and we can mark it with this vertical line, and we can see clearly the 800. And now, because this was pretty harder, but I saw equal lows and equal highs right here, equal highs. So this is the second step. Make sure you know where the buy side and sell side liquidity is. So where the most stop losses will be, where the price can go. So here we are dropping to the 5-minute because this was easier, and we are going to mark it. If you want, use this magnet. It's kinda useful. I will use, for example, week, and if you drag it, it shows you where most close and where most the price was. So if you drag it right here, you can have pretty nice straight line. And also, as for the sell side, I use this, and we have it very clear. Second sell side, like second target, could be this. You want to see some fair value gap over or above these two lines. So here we are in a small downtrend, so we are going to look for short. Okay, so we place, I will delete the magnet now, and I will use this imbalance, this fair value gap, because this is on the 5-minute. You can see this, there is space, and I want to drag it like this. So the price will go here. It will go above these stop losses, above these highs, because you can have stop loss right here at this line, or right here at this wick, or at this wick. Also, this is a fair value gap, it's untouched, so we are going to go with the price through it. So we take stop losses, and also this imbalance we are going to hit, and we are going to target to this sell side liquidity. So this is very easy, and at the entry point I want to look at the inverse fair value gap. So we will see, and now there is the liquidity grab, but we don't really want to go in this because we are short now. You just place the alert on the 15-minute fair value gap, and you go on 1-minute time frame. Now you are looking for a very nice inverse fair value gap. We have one here, okay. There we would be stopped out, because if we would enter at the close, so we place the stop loss above. I don't know how you place stop loss, but I place above last high or low. If you would place the stop loss above the imbalance, it's also okay, but here we would be stopped out. So we are traders, it's part of the game, never mind. We have another inverse fair value gap, probably here, and with bigger volume. Okay, this is, if you can see this, this pattern of these candlesticks, and use inverse fair value gaps or fair value gaps, you can spot this, that this is a very nice setup. So I will mark it down, and the philosophy is that we enter at the candle close of this inverse fair value gap. We place our stop loss above, and we target at the sell side. okay. But this is very poor risk to reward ratio, 1.6. I don't really want to. Okay, so here we have it. Also, we have these nice equal lows, so this is also sell side, so we can push it right here. We have 2.3, but I don't want to trade this because it's a poor risk to reward ratio for me. I want at least 3, 3.5 or 4, something like this. So I will push it somewhere like here, okay, at this close of inverse fair value gap we have 3.42. If you push it right here, also what you have order blocks right here, so you have also a nice order block. So if you want, you can combine it. I just give you some examples. So at least, yes, we have 4, almost 5, so 4.8. So we target it, sorry, we target it, and now we can clearly go, and it comes back, but we are still waiting and we are holding it. We are not scared, and we hit TP. So this is very nice. We have almost 5% done in during the London session. Now let's get to the footprints. So we have a very nice chart of this. I will show you the time. It's 10:20, and look at the time also here. Here is 10:20 almost. Also, it's just 1 minute delay on the footprints, so never mind. But I think that some of you already knows that there is some delay. So this is it, and now we are looking for inverse fair value gap, and we are also looking on our candles, also on the delta, and we are looking for exhaustion print. So we already know that this didn't work. This was very nice candle. We have negative delta. I would like to see more like this purple number, like 95% or 100% delta, but we don't have it. Okay, never mind. But we have trapped traders, trapped buyers, and we have stacked imbalances to push it down. Okay, this wasn't that good. And here we have the exhaustion print with very nice delta. So I would really go in this candle, but we are stopped out as for my strategy, but never mind, we have a second chance. So let's get to the second chance. This second high is this where we took this high at 10:28 approximately. So we want to see what we are seeing. This candle, this wick took out this high, so this is also the liquidity grab. Also, there was the big pressure of the sellers. You have a lot of volume traded on the high, you closed quite low, you have a lot of selling pressure, you want to go down, you want to go short. Also there is the buying pressure, and also you have trapped buyers, you have negative delta. Second candle, very big pressure of selling 54, imagine 54 lots in this candle, very nice. 39 lots was trapped, we don't want to see this. And we have red candle, this paradox, red candle, and green delta or positive delta. So this is also very nice, very nice. What do you want to see? Because you have a lot of buyers that pushed the price but they didn't had the strength, so they had been crushed by the sellers, and a very nice full red candle. We continue. Also sellers are coming in, and buyers are getting trapped. So very nice. And where we are entering, here we have the gap, here we have the fair value gap, the inverse fair value gap. I will mark it so you can see it. So this candle is the one. But as for the risk to reward ratio, we don't want to enter here because of the poor risk to reward ratio. We want to go, for example, for the retest. If you want to wait, Sometimes it's good, sometimes it's bad. It's up to you. I don't know how you want to trade, but backtest it, and I don't know what is more comfortable for you, but I prefer more to enter directly. But as for the risk to reward ratio, I wait. If the risk to reward ratio is okay, 3 to 1, so I step in immediately. So just to know, okay, we are stepping here. We made a very nice low. We are going to retest. We have an order block. You have a lot of sellers also coming in. You have increasing delta. You can start to see red numbers. This is what you really love to see. So even if you would like to enter, very sweet candle would be this if you would like to enter, because you have stacked imbalances, you have a lot of selling pressure, 1 to 3 big lots, big contracts traded, and you have negative delta. Okay, unfortunately, we have only one exhaustion print. I really love exhaustion prints, but unfortunately, we don't have them. But from this candle, we could very nicely enter. So 1047, it's this candle if you want. Yes, this is it. And you don't have to go like this big stop loss, but you can put it on this high, and you can see you have almost 4% done. So this is it. I wanted to show you the two possibilities I want to show you in other videos. Thank you for watching. I hope you enjoyed it, and see you at the next trade and setup. Thank you and bye bye.